Hello and welcome to our viewers on cruxinvestor.com and also to the listeners on Cruxcast, our new podcast series. We're here today with Bryce Crocker. He's the CEO of Jervois Mining. Now we saw you back in around sort of 12th of March, middle of March. You'd done, or just announcing the M2 story, but you've been quite busy since then.
We have.
Why don't you start? Give us a 2-minute sort of overview without getting into too much detail about the recent news,
Sure.
And then we're going to get into it.
Well, I guess we're looking at creating a platform that institutional investors can get exposure to battery raw materials.
Mm-hmm.
We're big believers in thematic. We believe the investment alternatives that are open to institutional and also retail investors substandard in terms of quality of the assets and quality of the management. And so we're a group of largely ex-Glencore executives who've come into Jervois and are looking to make a difference.
Fantastic. Okay, so you're focusing on cobalt at the moment.
Cobalt, nickel, copper, because cobalt obviously comes with both products generally.
Fantastic. So just for people who don't quite understand where you've been and where you've come from, you mentioned Glencore there, big name.
They're a large cobalt producer. I guess I was part of the founding management team at Xstrata. Peter Johnson, who's our chair, so Peter ran WMC's nickel business back in the days and then worked for Glencore for a long time, sat on Glencore's executive committee, ran their global nickel assets.
Yeah.
So obviously Glencore have always been the largest cobalt trader. We've got a group of executives who've come out of that platform and now we're looking to create, as I said, an investable alternative. We know cobalt well.
Mm-hmm.
We've obviously got a lot of history of understanding the DRC to the extent one can't understand that jurisdiction, but equally creating something that has decent assets, non-DRC sourced units, which is increasingly important.
Why is that important? Just tell people.
I think downstream users are increasingly concerned with the artisanal supply and the potential that contaminates or is blended in with regular units.
And when you say contaminate, what's the underlying issue here?
The difficulty with cobalt is tracking where units it's a complicated flow sheet. It's mined, it's concentrated usually, it's leached, it's refined, and so it's blended in a number of phases. And approximately in 2018 you probably had 30,000 tonnes of cobalt in a 120,000 tonne market, which came from artisanal sources, which is essentially men, women and children, tens and tens of thousands, hundreds of thousands in the case of last year. And that material is finding its way through the cobalt chain, particularly any units that flow through China. And that creates challenges. When I was working with Xstrata Glencore, we would provide guarantees to our customers, to Intel, Dell. There were two limbs that we provided guarantees on. One was the non-conflict material, which is obviously quite easy given we control Katanga and Mutanda. In the southern part of the DRC, well away from any conflict zones. So conflict cobalt's somewhat of a misnomer, but the artisanal issue is real. Nobody wants to have an iPhone or an electric vehicle with a battery that's essentially represented by a significant component of children which have been working under terrible conditions, unsafe conditions in mines underground in the DRC.
So it's the child labour component that people are...
The child labour is it's a significant social issue both in the DRC and also for Western consumers.
I guess you're touching upon also there in terms of tracking this. There's some sort of blockchain AI components there. There's
initiatives underway, but I mean I've worked in cobalt for a long time, and I can tell you the trading. It's a complex industry. It's a niche industry, and it's an opaque industry. And there's going to be real value for those that can create an operating company. So we're not promoters. We're not looking to kind of aggregate a portfolio of assets and then move on. We're going to construct an operating company. And because we're constructing an operating company, there's a real value for those downstream users to have sources of supply which don't involve anything from the DRC at all.
Fantastic. Okay. Let's go back to the Glencore bit. You come from a big company, big exposure, big projects around the world, and you come into a junior space. Okay, so I imagine, I'd like you to tell me, that's a very different environment. I mean, how's your thinking had to change for some parts of this, or is it the same for other aspects?
I mean, I'm from the Xstrata side. We sold to Glencore in 2013, but obviously I work closely with Glencore, and the rest of the team is largely Glencore. If you came from a different large mining company, I think it would make more of a difference. Glencore is obviously it's an owner-operated principal type business.
Yeah.
Obviously, junior mining company is different in terms of the infrastructure and the level of support and the way we're set up organisationally, certainly. But I think that we're a group of like-minded individuals who purposely left large companies, not because we couldn't stay employed with large companies, but because we wanted to do something different and essentially create a mid-tier company. Yeah. And we've got the opportunity at this end of the market. I mean, if you look back when we founded Xstrata, the reason why we did that was because the people wanted an investment alternative that had more beta, if you like, than just purely choosing between Rio, BHP and Anglo, and that was essentially the fund manager investment decision options that they had at the time in London here. Yeah. I think what we're looking to do as Jervois is, again, create something that's got a management team that is of a different level of quality than typically exists in the junior mining sector. Not always, but obviously management in the junior mining sector is perhaps not as strong as it ought to be. And particularly is really focused on getting into operations and creating an operating company. So to take something that was essentially capitalised at a very low level and to then build that up over time, that's exciting. Building mines, commissioning mines, operating mines, that's a part of it.
I guess very exciting. You know, you're in control of your own destiny to some degree. Obviously there's some variables outside which you can't control, but you're making decisions here. But sticking on this, you've, as I understand it, you've acquired 2 companies since I've known you, so you're quite acquisitive.
We are.
That's pretty impressive. Okay,
so we've got a couple of shareholder votes to get through, but I think we're setting. They're small steps, but they're setting up. They're important steps to set up the platform of what we want to do.
Okay, and I want to come on to your strategy because I like it. I think it's a good strategy. I'm interested in the team's experience, but if I look at M&A, you're going to require to raise some money for some of this, to get this going. I know you're doing deals, and we talk about how you've optimized that and reduced shareholder dilution, etc. But again, coming from the larger background, you've, as you say, fund managers, they're a choice of 3 or 4 guys go to, and that's the background you come from. In this junior space, have you had to create new relationships? Who are you talking to for funding?
No, it's very different. It's been a learning process for me. I worked independently since the management team sold to Glencore in 2013 on behalf of the rest of the Xstrata shareholders, and I've enjoyed working at the smaller level. Obviously our background in association, we work a lot with private equity. But equally, I think at this end of the market, there's you have to build up the retail following. You need a balance between strategic investors, or if you frame private equity as strategic, but retail is important, liquidity is important. Yeah. If I look at most companies that are sub 100 mil market cap, there's an argument as to that their ability to succeed, the liquidity is limited, and that kind of creates a lot of challenges for both your clients and institutional clients.
Well, imagine with the institutions, you're having different sorts of conversations. It's like they need to see X market cap, they need to sort of see Y revenue potential or near-term revenue. So those are very different conversations. But you're getting in there, obviously working. So
far, it's been a difficult market, but we're excited. Yeah, both of these transactions set us up. And in terms of really making that transition to become a producer, particularly the Cobalt merger.
Yeah, I think that's fantastic. Well, let's talk about that. Okay. So when I spoke to you, you were telling me about M2 Cobalt. Great asset, another great asset, great exploration team. Tell me about Cobalt, because I think the other thing I thought interesting about that, you've got a neighbour that's next door which you might know.
Okay.
Well, in terms of, is Glencore not an owner of assets nearby?
No, there's no. Glencore and Blackbird, correct. They've got the old Miranda closed site, correct.
Got it, okay. Well, tell us about this transaction.
So I guess why we're attracted to Cobalt and the Idaho Cobalt project is it has the ability to transition us to become a producer much more quickly than could otherwise have occurred. So Kabanga in Tanzania and Kalembe in Uganda, they're assets that were in negotiations with both the governments in the respective jurisdictions. They're exciting. They're assets that shouldn't naturally sit within a company Jervois size, so that's why we're chasing them. But equally, if we're awarded tenure by either government tomorrow, realistically they're 3 years from first production. So 3 years is obviously it's a reasonable period of time in the eyes of capital markets.
Yeah.
The attraction of Idaho is it's been significant investment at site. They're $100 million in. The quality of the resource is high. 0.6% cobalt, 0.8% copper.
Yeah.
It's DRC type quality
without
being in the DRC.
Right.
Smaller than the DRC, so it's 5 million tonne of inferred resource, not 50 or 250, but very high quality and very relatively low development risk. They've probably got they've got a pathway to production. Once we finalise the definitive feasibility study, when we take control, once you start the box cut and open the portal, you're 12 months to first ore on the mill, and the commissioning is almost instantaneous, as opposed to a large metal. If you've got a large pyrometallurgical or hydrometallurgical facility, you've got a 3-year commissioning period.
Right.
3-year construction, 3-year commissioning, very long dated, very high risk.
Yeah.
The capex is small.
Why?
It's executable. It's a simple sulphide underground mine.
Right.
The tonnage is. Their published feasibility studies on 800 tonnes per day,
right,
of which the mine and mill was around $50 million at the time. They're increasing that now to 1,200 tonnes per day, which is the capital is going to rise, but not significantly.
Not proportionately.
But these are the type of projects that companies our size should be doing. I don't want to be a junior mining company. I've said it very clearly that where you've got a 50 mil market cap and you've got this project that requires $500 million of equity.
Good luck.
It's a waste of time. Who are you kidding? You can't do that. All you can do is sell it.
Yeah. So tell me more about the deal. How have you structured that deal? Because you talked about taking control. So
there's 2 transactions. They're plans of arrangements. So they're nil or at market mergers. Both the M2 merger, then the Cobalt merger. Independent subsequent transactions. So the M2 circular goes out next week. So that's essentially a prospectus on Jervois for all intents and purposes. It will contain the PEA on the Nico Young project in Australia, which is our foundation asset. That goes out next week, and the shareholder date for the M2 merger is 14th of June. The plans of arrangements, we need 66 and 2/3 voting present. For the M2 transaction, we have over 50% lockup. High probability of that going through.
Right.
High probability of both transactions going through, but the lockups on M2 make it almost arithmetically certain. The ECS transaction, because the transactions are separate, the circular for the ECS merger will go out immediately after the M2 shareholder vote. Once that positive vote's received, the ECS shareholder circular goes out, and the shareholder date will be the 3rd week of July.
Okay, gotcha.
So after the 3rd week of July, the pro forma, based on current prices, the pro forma market capitalisation of the group will be approximately $100 million.
So you're up there. You're kind of leapfrogged up to where.
Yeah, I mean, we're not doing it just to get bigger. We're not in the business of getting bigger,
right?
Just to get bigger. But for the reasons that I outlined in terms of the asset, it does transition us because we're going to be in production far more quickly than we would have been otherwise. We've got a project that's essentially halfway constructed that we need to finish. What it also means, we had a long debate. Essentially, myself and all of the board, we're all compensated on value per share. So we're very focused on dilution, very focused on how we manage the capital base. Essentially, there was an opportunity. Sure, I don't want to issue shares at 25 cents. Have a perception that significantly undervalues Jervois, but also this was an opportunity where markets are weak. The opportunity for others to raise capital is constrained, and the relative underperformance of other stocks was obviously significant relative to where we were. So it created an opportunity for us to do a transaction on favourable terms, and it also means for both M2 Cobalt and E-Cobalt shareholders, they're along for the ride. They're part of the story. That we're now moving forwards together. We have a team that can deploy and can construct and commission finally the Idaho Cobalt project. And I actually want to do it now while Cobalt markets are weak, because for all of our shareholders, whether they're currently Jervois, M2 or ECS shareholders, we want to be in production when prices recover, and prices will recover. That's one thing.
Yeah, so I think everyone's a big bar of the EV story. Battery metals should be doing well for some reason at the moment. There's a bit of a lull, but it's coming. I think that's a story which is well told. You've told it, in various conversations that you've had. But I want to talk about, not necessarily about the deals that you're doing, but I want to talk about the deals that you're going to be doing. So you've got a strategy here. So your thesis is cobalt, nickel, and
Cobalt, nickel, copper.
Copper, of course. That's your theme, and you're going to stick with that. You come from a background of big companies. You want to build a mid-tier. You're up to circa $100 now, potentially when these deals happen. What's the future look like for you? What is the strategy? Are you going to continue an M&A strategy? Are you going to be acquisitive?
I'm a big believer in never boxing myself in, especially not where a camera's rolling. So I'm not going to say definitively I'm never going to do a transaction, because then I'll come back and do a next interview in the first question will be so exclusive. We just replay that.
Yeah.
But equally, it's not a scattergun approach, and because we want to build an operating company, there has to be focus.
Right.
So
on what?
Focus on constructing operations. And so what we have now as part of the portfolio, we've got essentially a development a project in Idaho which needs to be built. We're in advanced discussions with, as I said, the governments in Tanzania and Uganda. So the way that we're looking at it from a portfolio perspective is Idaho is going to be core as part of what we do. East Africa is also important. Will we not do another transaction? I think it would be. We're looking at anything else very carefully. I'm certainly being explicit now with institutions who I meet here in London now that we won't do DRC. Up until now, we've looked at assets in the DRC. We understand as much as one can the DRC. And it's a tough jurisdiction. And for those reasons as well, with the dealing, because we're also running through our residual asset or core asset in Australia, the Nico Young project. We're looking for off-takers for that to partner. So that's not an organisational focus for us for a capital perspective. We're still managing it, but we're not allocating any capital. And dealing with the OEMs on that, it's clear that having an entity that can provide raw materials that doesn't have anything coming from the DRC is just a real.
No, I get that, but the bit I want to understand is, some companies create value by doing M&A, constantly M&A, just rolling up, and they do drive share price that way. But they forget about the business. What you were saying is we want to focus on the business. The value is going to be created through developing the three assets that we've got. But you will look at other opportunities, but your focus is on what you've got today.
Yeah, I mean, we've got our hands full organisationally with what we have. That's not to say we wouldn't look at other opportunities. Sometimes other opportunities come with teams, such as the deal in Uganda with M2. We've got a team essentially that was already undertaking that exploration. So I'm a big believer in focus and not having a crab shoot and just going out and looking and kind of chasing assets in disparate geographies. I think for juniors as well, or for small mining companies, I mean, obviously we're heavily focused on company G&A. Heavily focused on overhead, on expenditure, and it's important to, if you really want to move forwards projects, you can't do it sitting behind a desk. You have to be out there, and myself and the board are very hands-on. It's again a different type of culture, I guess, and our board meets monthly. I'm here in London with Peter Johnson and Simon Clark now. We're heading back to Africa shortly. Brian Kennedy, my non-exec, he's been with me 7 or 8 times to Africa since we joined 18 months ago. The board's hands-on. We are really, it's quite a different type. I guess when I look through and when we do these type of transactions with others, you do see a level of, and it's fortunate for me, the level of support I get from my board is very, very different to how many of my peers.
So it's interesting. So the assets at the moment, you've got, I think, Nico Young with pre-fees due.
Now it comes out with the PEA comes out with the M2 circular.
Okay.
So the M2 circular is essentially it's a prospectus on Jervois for M2 shareholders. So that contains a 43-101 PEA.
It's in there. Okay, great.
And so there's a 500-page technical report. All of your readers can look forward to.
We might have you summarise it. It might be the smartest thing to do. Okay. And then with Idaho, that's out of feasibility underway.
We're working through. Peter and I were there with some of our directors last week. We're working through and agreeing what is going to be the work plan
Yeah.
to finish the definitive feasibility study.
Right.
So that when the shareholder vote at ECS goes through on the third week of July, we're ready to deploy essentially immediately with regard to the drilling that's required, both to finalise metallurgical test work, improve the quality of the resource before mining, and also just to really just we think optimise the DFS, the DFS significantly.
Right.
That will be finished in March 2020. I'm already talking to financiers on the debt side with the intention that we'll construct immediately, and then it's a 12-month runway, as I said earlier, to first ore.
Right, okay. And then Kalembe, obviously, exploration.
Kalembe and Kabanga, we're making progress with both governments.
Right.
Our intel is very good.
Progress on what?
So if you take them in turn, we've applied in Kabanga in Tanzania. So Kabanga's the best undeveloped nickel sulfide deposit in the world, bar none. 60 million tonne of sulfide resource at 4% nickel equivalent. So it's on a par with Thompson, Manitoba, Raglan, Voisey's Bay. A phenomenal asset. Obviously, Tanzania has been through a difficult time politically, or as it pertains to the mining industry. We're talking to government. We've applied for what's called a prospecting licence.
Right. What's that? That just lets you continue.
Essentially, obviously, Glencore and Barrick spent $250 million before the deposit was removed because they failed to develop it. So it's called a prospecting license, but obviously there's no prospecting that needs to be done. We just need to update the ESIA, update the DFS, and that's a year process once we get tenure.
Right.
We're negotiating with the government. There's a couple of other parties who are also negotiating, but we're well placed. And the government also looks at us. They look at us credibly because they don't see a junior mining company.
But when you say there's a couple of other parties there, what's that mean? On the same asset?
Are you correct?
Are we bidding here, or is it?
It's not a bidding process. It's a negotiation with the government as to how the project is best moved forwards, and who should have stewardship or ownership of that.
And that's, I guess, and having worked in Africa myself for quite a few years, you're going to need to give them comfort or certainty, and that's got to come around your ability to finance moving this thing forward.
Yeah, I think the government looks at us, and this applies for Uganda as well. If you look at the backgrounds of our boards collectively, we've raised, I think, $40 billion in the mining industry. So there's probably only, aside from my co-founders at Xstrata, there's a very small pool of people who, even in the mining industry.
That's true, but different circumstances. So you're a new company, it's your company, your board's company, shareholders' company.
But I think the credibility we have with government, they understand that we can raise the capital. That there's no... they look at us and they see that we have the technical ability to construct and operate mines.
Right.
And they also, ultimately it comes down to your track record. There's plenty of juniors who go through and say they can raise the capital.
Well, that's the problem for these guys. This happens all too often. People come in and go, yeah, the money's tight, it's fine, but it's not. It's a wing and a prayer. But you think the conversations, you've been able to lend comfort.
Yeah, I think that they look at us, and that, to be honest, the financing is about. There are issues we're working around with governments. Right. Ability to raise capital is not one of them. No.
Great. Okay. Well, that's good news. What are the things that they ask you about? Just so it would be interesting to know.
I think that they want to both countries want to understand what you're going to do from how it's going to be managed. They're obviously looking at the way we're building out the business and want to understand what they have as a priority, which is understandable. I think there's a greater focus now on environmental standards, on social standards, on how you engage with the community, which places us in a good position because, again, we come from large mining companies. I'm a big believer in fit for purpose, so you don't have to necessarily apply the same approach to capital intensity and de-risking in a junior mining company as what you do in a large mining company. You can kind of be more nimble and more
agile,
faster. But equally, things like environmental standards, safety standards, they're critical. So the host governments, I think that's where we have a competitive advantage over others. They do look at us and they look at how M2 Cobalt's been operating in Uganda, for example, on the drilling side. They're extremely well regarded. They've got a track history. They've been in the country as it pertains to Uganda for 10 years. And we also, through our history, kind of know the asset and know the country quite well as well.
That's true. And what about from their side of the delivery? I mean, what's the mining code like in these countries? Tax, all that,
I think
royalties.
Tanzania is well publicised. They've gone through some changes which have been complex.
Yeah.
I mean, we're working through the government with those. We've said that we we believe we have a mechanism whereby we will operate within their existing mining laws, and that can be done. Uganda is very much open for business, very positive, very welcoming of foreign investment into the mining sector, and obviously Kalembe and the KCCL, the Kasese Cobalt refinery, is a strategic asset for the country.
Yeah.
I mean, when Falconbridge was operating, it was 10% of the country's GDP approximately.
And you need to remind me of the terms again. You're going to be 100% owners of M2 and eCobalt?
Correct.
Right, okay.
Yeah, they're plans of arrangement, so essentially they become Jervois subsidiaries.
And you haven't inherited any risks, liabilities and all of that?
None that other over and above what was already in M2 Cobalt and eCobalt, but obviously we had detailed due diligence on both.
Right, okay. So again, let's just recap for investors. Your plan here is to develop nickel, cobalt, copper, be a mid-tier. You're at that phase at the moment where you're having to have conversations. No, you are having conversations about financing because you potentially quite close on a couple.
My background's in lending, and you start conversations early.
Yeah.
I mean, I want to obviously get the most competitive source of finance into, for example, Idaho. Right. And part of that involves making sure that the banks can do their due diligence, so you're not forced into alternative providers that may be more expensive.
So people, when they hear that, they make assumptions around dilution. Okay.
I think that, I mean, obviously at some point in time, once the DFS is finalised, and we will be raising capital as part of an overall financing package to go into production. But that's off a very different base as to where we are now. Yeah. At that point in time, we've completed a definitive feasibility study. There's a debt package in place that's confirmed, because equity is obviously the last part that tips in. Yeah. And I'm also very straightforward. I mean, people will sit here and I'll talk, because I could not use equity. I mean, I could stream, I could use royalties.
But it's still...
I find I'm a simple person, and shareholders don't buy our company for me to stream out cobalt exposure. I think that's rubbish. Yeah. I'm not scared of equity, and I think that we do it at the right time. Obviously, everyone associated with the company is highly motivated, personally motivated by the value per share. So we'll finance in a measured and appropriate way, but also not introduce, because Idaho is part of our story. It's not the only story, so I'm not going to gear up the company and introduce too much leverage by being afraid to issue equity. Yeah. But these are the pool of capital that's open for construction equity is large. Yeah.
That's true. And so you're trying to, again, correct me if I'm wrong, you're trying to move the company from a small player where perhaps it's got more risk associated with it, with lower market cap, ability to raise capital, etc., to survive, wherever we are.
The company's survived for a long time. It's been on the ASX for 50 years.
Yeah,
I just think that, we wouldn't have assembled the board and the management team we had if we were looking to not build out a significant operating company.
Well, this is what I'm getting to. I think it strikes me through reading through the various material that is out there about you. You've got the mentality of a bigger company.
Most junior mining companies, they don't want to do this because they don't have the
capability. It's about survival, right?
Well, but it's also, this is hard work, building mines and constructing operations. That's 3 or 4 years of your life you're not getting back in a part of the world that's not adjacent to where you live.
True.
But we've got a team that none of us have retired. Everyone's rolled up their sleeves, even the guy everyone on the board, and we're going to make it happen.
Well, that's the insider's view, and from an investor's point of view, and again, I'm focused on retail high net worth family offices here. They don't necessarily want to sit around for 3 or 4 years with the shares not doing anything. So why don't you leave it with, where's the value coming from? What are you doing? And what do you want people to think about when they think of Jervois Mining?
Yeah, I guess we're obviously highly focused on shareholder value, and it's not shareholder value just in 4 years' time. Yeah. I think if you look at what we're doing, we're creating something, because we're also conscious at this end of the market what's required. So we're undertaking a drill program currently in Uganda, for example. So the PEA, which comes out in North America with the M2 Circular, is a PEA due to the inclusion of inferred resources. We made a conscious decision not to spend $5 million drilling out the resource to measure and indicate it to support a higher classification under 43-101 of studies. Right. Those funds have been redirected to Uganda, because as a junior mining company, infill drilling a laterite resource, there's no news flow there that's going to get our share price going. Uganda is highly prospective. It's the DRC geology, crosses the border. It doesn't stop, obviously, at the border.
Yeah.
And the rock samples that we've had published, I mean, you can see the numbers, and it's extremely exciting. And that's where, as a junior mining company, if I'm going to spend money drilling, that's where I'm going to drill, because that's where I'm going to get an intersection that's going to put a rocket under the stock and do things for the retail and do things for us and be able to give us more flexibility. That's a better use of shareholder funds. If you're in a $50 billion mining company, we probably would have spent it elsewhere. But it's at this end of the market, we have to be cognizant of what works from a capital markets perspective, but also spending it in the right way insofar as we're not just drilling for the sake of drilling, we're not promoters, these aren't Hail Marys that are just kind of getting thrown out there hoping that something sticks. We're excited by what East Africa represents. And I guess from a capital markets perspective, we're trying to create something that's got some developed world assets, stable, secure, generating cash flow, but you've also got for the equity investor and for us as owners of the business, that East African upside where if you get it right, you can make 10, 20 times money on money returns, which is what you need. I mean, obviously, people don't invest in a company like Jervois. If they want to invest in a low risk 5%, 10% return mining investment, they go and invest in BHP and Rio. We're all doing this because we think we can do exceptionally well and generate money on money returns. And essentially the owners of the business alongside us think likewise.
Yeah, and you've done it before.
We did it at Xstrata. I mean, together with I guess the quality of the team we had at Xstrata was profound. One of the best management teams I think that's been around the industry, and I had the good fortune to kind of sit on the coattails of that. And the quality of the team we're assembling at Jervois, it's not everything. The guys, we're not alchemists. But if you get the right people in place, have the right philosophical approach, then good things happen, and that's our strategy.
That's great. Great summary. Lovely to catch up with you and see you. I know you're jumping on a plane tonight, but when you come through London, do come and see us. Love to hear more about things as they develop.
It's great to talk to you. Thanks for the opportunity.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.